Hello, everybody. Welcome to Bitcoin Not Crypto. My name is Forrest Stevens. In today's episode, I'm going to be talking about who MicroStrategy is not right for, the people that shouldn't hold MicroStrategy, and all of the reasons why it might not be right for you. Before I do that, though, I'm going to tell you about Bitcoin Well, which is where I buy all of my Bitcoin. The reason I do that is they have the lowest spreads for a non-custodial exchange. A non-custodial exchange means they never hold your Bitcoin for you, so you eliminate third-party risk. You send them money, they send you Bitcoin directly to your hardware wallet. They also have this awesome bonus reward system where you can get free Bitcoin. In fact, there's a Lightning address popping up right now. If you're the first person to scan this, you'll get some free Bitcoin. And if you use my code, which is in the description, you can also get some free Bitcoin. They have non-KYC options available for some people. And all around, they are just a great, trustworthy source of getting Bitcoin. So MicroStrategy has had an unbelievable year. It's up just an insane percentage since the beginning of the year. However, in the last little while, it has been in a bit of a downtrend, and there's a few different reasons for that. I would say one of them is just a cooling off phase after a just monumental run up. There's also been some short selling against it as it's gotten attention in the media. And there's also, of course, been the ATM that Michael Saylor has been issuing new shares into the market, so creating sell pressure there, which has done a lot to keep the price from continuing to run up. Now, it's very natural in stocks and in the market and basically in everything for there to be a cool-off phase, which means that stocks basically cannot run just non-stop upwards because there eventually hits a level of sellers and there eventually runs out the buyers that are in that price range. So it's just inevitable because market cap and price is made on the margin. That means that there needs to be buyers and sellers, and when the amount of buyer and sellers go down, right? People exiting the market, not as in selling their position, but not becoming buyers or not becoming sellers. When there's less of that, and then there's an activity that increases the amount of buyers or increases the amount of sellers, it can move really sharply and really quickly when there's low liquidity within the market, where there's not a lot of activity. So we've seen volume going down a little bit. We've seen price staying stagnant and cooling off to the downwards, where we've actually seen a massive spike up again here, a nice little bounce of 10% in the day. But all of this kind of shows that this is an extremely volatile stock, right? I think people should understand Bitcoin. They should hold Bitcoin. They should be believers in the long-term vision of Bitcoin as a protocol, as a base layer money for the rest of the globe. And only then should you actually look at MicroStrategy. Now, MicroStrategy, you should think about it in a way of them having a base layer amount of Bitcoin and you buy in at a multiple on that base. And over time, because of what they are, they can acquire more Bitcoin and that'll increase your Bitcoin per share. We could implement a strategy of leveraging ourselves to acquire Bitcoin, which is one of the strategies that MicroStrategy does, right? However, we're not going to get basically 0% interest rate and a very high conversion price. So very cheap debt. We're not going to be able to get that as an individual. So by buying MicroStrategy, by believing in the underlying Bitcoin, and by realizing that they can get very cheap debt because of the structure and the company and the volatility of the stock, that is what you're benefiting from. You are getting the ability to leverage Bitcoin at very good rates. There's a lot else going for it. It's a stock as opposed to an ETF and a fund. There's certain capital allocators around the world that cannot buy US ETFs but could buy US stock. So they're buying actual shares of MicroStrategy. There's captive capital in different areas, convertible bond market for one, corporate bond market for another, that can tap in and fund MicroStrategy buying more Bitcoin and increasing that Bitcoin underneath. So you have to understand that it's a lot different and it should trade at a premium based on those things, right? There's the passive funds and the ability for MicroStrategy to get into ETFs, market weighted ETFs. They just got into the QQQ, which means a huge amount of inflows, and it means passive inflows. It means rebalancing of them needing to buy more shares to keep their weight in the QQQ. That should allocate and create a huge premium on MicroStrategy just off of its net asset value. I'm reiterating all this. I've said this a lot in my other videos, but I'm reiterating this to show a little bit of a snapshot of what MicroStrategy is and to show the value proposition of MicroStrategy and to paint the picture of why somebody would want to own this. Now, the reason you wouldn't want to own this is back to that original point that I brought up. There's been a huge downtrend, a huge cooling off period, and it's hard to hold something, I guess, that is going down, right? I think a lot of people are emotional, money and emotion, those two things tie together very easily. So you see your net worth going down if you're fully allocated to something like MicroStrategy. It's a leveraged play. It's a highly volatile play on Bitcoin. So Bitcoin already is too volatile for a lot of asset allocators, and MicroStrategy is twice the vol of that, right? So you have to kind of understand that. You can understand the whole vision and value of MicroStrategy and say, hey, that's really good. That sounds awesome. I'm going to buy some of that because I believe in all that. But if you also don't understand how it moves, which is extremely volatile, then you're going to get scared out of that position and you're going to sell for a loss. I think a lot of people right now that have gotten into MicroStrategy after this huge monumental run, the news, everybody talking about this stock, the reason everybody's talking about it is because of that monumental run. And when people see that, they think, okay, well, I want to get leverage to the tits, right? I want to buy short dated call options that are out of the money, the tail end. I want to buy MSTX. I want to buy MSTU, which are prone to NAV erosion, which leverage you 2x of something already twice as volatile as Bitcoin. So right, you're timesing the volatility every time you go into these leveraged plays of an already kind of leveraged play of something incredibly volatile. If you can't handle the volatility of Bitcoin, if you can't handle the volatility of MicroStrategy, you will not be able to handle the volatility of MSTX, MSTU, and options on MicroStrategy. So you need to understand that you need to figure out your risk tolerance. You need to figure out your ability to handle volatility. You need to understand risk management, position size, right? If you think MicroStrategy is a sure thing, even if you don't buy something options, right? They create leverage, but they have realized loss risks in them. If you buy a call option, you're putting that money up front, buying that premium. And if you don't sell it before the expiration, if you let it expire and it doesn't expire in the money, you've lost that money. That money's gone, right? That money was given to somebody else for that contract of that option, and it's gone. You can also open yourself up to even bigger risks with different types of options, but this is just a long call option is what I'm describing here. So you might think, okay, well, I'm not going to do that because I don't understand options or something like that, but I want the outsized gains, right? I'm not okay with just the crazy gains that MicroStrategy has. I'm going to buy a fund that's managed for me, that gives me basically two times leverage, and I'm not opening myself up to realized losses unless I sell the thing, right? Well, the thing is there's a lot of internal going on in those funds, and yes, it's unlikely that they'll go to zero, but what they'll do if they continue to go down, right? If MicroStrategy trades sideways for a long time, if it trades down for an extended period of time, these funds are just going to get beaten to crap, and they will do reverse stock splits to keep from going to zero, right? They never have to go to zero, but their NAV will get eroded, their net asset value, because they're buying options, they're doing credit swaps, they're doing all this stuff. And it just ends up that MicroStrategy, the underlying, goes down, right? These things are going to get beaten basically to zero. These stocks could get beaten to 99.9% down, right? And that's, for all intents and purposes, that's zero, right? That has opened yourself up to to realized losses, right? I mean, yes, you still have to sell it, but on paper, you're just down like crazy. I'm not saying this is going to happen. And in fact, I am extremely bullish on MicroStrategy. I think they have an opportunity to increase the share price like crazy over the long term. And that's what, for me, it needs to be understood, and is something that I personally understand, that this is a long-term play. I do not leverage myself in the short term. I don't play with MSTX, MSTU, because I don't think that I am a better trader, that I understand some sort of alpha, that I have some sort of edge over the market in the day to day. And that's when those tools are basically supposed to be used. They're supposed to be day, they rebalance every single day. They're designed to be sort of a very short term tool to play a momentum trade. And that for me is not what I'm interested in doing. I have a long-term play. I have a little bit of leverage on that because I understand options and I've taken an options position. I also hold shares and I hold it for the long term. I'm lucky enough to have bought, my cost basis is at a level where this downturn that everyone's losing their minds over the past couple weeks, it still doesn't have me anywhere close to being negative on my holdings. So I'm looking at this and thinking, I'm fine. And the reason I'm fine is because I'm solvent. And the reason I'm solvent is because of my lack of leverage. People think, okay, MSTX, it's 2 times. I understand that's leverage, but they don't understand what leverage really does. Leverage puts you in a situation where you can lose more than you have. And it seems like that isn't really the case when you're just buying an ETF share of something, but you're opening yourself up to a lot of risk of loss, even with something like MSTX and MSTU, in my opinion. Now, is there a future where someone like me would trade or would hold for a period of time something like MSTX and MSTU? Well, I've already told you I hold a leveraged position. I have options. They're long dated. They're 554 days to expiration, something like that. The reason I'm okay holding that is because I bought those at a time where I'm up 124%, 134% on them. I've been up 300% on these options. So I'm down a lot and I'm fine, right? Obviously, because I'm still up. And even if I went negative on them, that I believe would only happen in the short term, because right now MicroStrategy is in this mass accumulation phase, and in that is the destruction of share price appreciation in the short term. But that's why these are leaps. These are long dated options that I hold. They're very long dated, 546 days, whatever I said, something around that anyway. And that's because I looked at all the catalysts. Right? A lot of these catalysts end up being kind of nothing burgers, but all together, they end up pushing the price up, the valuation up, the market cap up, right? We can see FOMC meeting this week was supposed to be a positive catalyst, a rate cut. And I think in the long term, a rate cut is a positive catalyst because MicroStrategy can get more favorable convertible bond offerings, but they're not going to do that immediately. They haven't done it immediately. And this is a long-term thing, right? QQQ, they've gotten included. Even after they got included with the news of it, the share price still slid. I mean, it's up today, maybe because a lot of these funds need to fully allocate for that QQQ date that's coming up, I believe on Monday. So it's like all of these things play out and they take time to play out. And that's why trading on the short term on something like this is extremely dangerous. And I think that you just need to understand who you are, what your goals are. And yes, of course, you want to just leverage like crazy because the upside, the asymmetrical trade, it just sounds so good to be true. But If you have a short dated horizon view of this, you will get wrecked in the short term because of the volatility, because the unexpected nature of the markets. In the long term, all of that smooths out, right? There's that saying, when in doubt, zoom out. That's the same thing, right? Zooming out backwards, buying a leap instead of a short to expiration option, or buying shares instead of a 2x leverage, that in fact allows you to zoom out into the future, because it puts less risk and less necessity for you to ever sell those things or to have them expire worthless or whatnot, right? So it allows you to zoom out into the future. So when in doubt, zoom out. And when in doubt, stay solvent, stay safe. We're dealing with something already volatile enough, with already enough upside. For the vast majority of people, it does not make sense to trade this thing. It does not make sense to leverage against this thing. There's already enough leverage in the system. Let's stop with the degeneracy. Let's just focus on building slow and steady, above market returns on something fantastic, with the underlying being Bitcoin, which of course has an adoption phase, is going to be the protocol of base layer money, and has the potential to change everybody's lives who are early adopters to it. So if you want to remove yourself even a little bit more from the risk of MicroStrategy, if you want to get what they are holding, which has less volatility, has amazing gains, 60% compound annual growth rate, something like that, right? Check out Bitcoin Well. They have the lowest spreads for a non-custodial exchange, which means that you pay less for more sats. You get to stack more with less money. Check them out. Link in the description. And I appreciate you guys. If you feel like I've missed something here, if I'm off at all, comment your questions and concerns in the comment section, and we'll see you on the next one.